Hello, everyone. Welcome to episode 2. Hopefully, this one will be a little bit shorter than the first one, the introduction. I just want to recap some things that happened over the last week in the financial world, and then give you a one tip on fitness, help you get started there. To get things started, we'll go cover the things that happened in the finance world. First thing was last weekend. Comcast outbid Fox for the takeover of Sky Network, which is a British company, um, and that's going to be pretty significant in the fact that those two were battling for a long time. Sky Network will be taken over by Comcast and will be run by that. Fox will not get the news over there from Sky News. Sky is pretty big in sports as well in Europe, so that's a pretty good acquisition for Comcast. We'll have to see how that plays out if the deal goes through. So far, they're the winning bidder though, so we'll see if that one officially goes through. Next thing, Friday at market close, there was actually a sector rebalance in both of the S&P 500 sectors as well as the MSCI World. So for a long time, we had the telecommunications sector, and that slowly depleted in terms of the number of companies and the number of relevant companies. So they are officially changing. They have officially changed that name to the communications services sector. And with that change, there will be a few companies, about 24, that will be moving from the consumer discretionary area and the technology area into this new communication services. So this will play a decent part in terms of, if you're investing in ETFs, those have to rebalance, and they will become more heavily weighted on certain companies. But as far as if you have a diverse portfolio, just watching the market, nothing's really going to change that much. But for starting out, if you're just getting into ETFs, you may want to look at those ETFs a little bit differently. Big names that are moving, so Facebook and Google, both the A shares and the C shares of Google, will be moving from the technology sector into this new communication services sector. So that will actually leave the technology sector with less weighting in terms of the total market for the S&P 500, but it will be more heavily weighted on a company like Apple. Apple is going to be much larger since you're taking out Google and Facebook, which were both very heavy companies in technology sector. Along with that, for companies coming from consumer discretionary, we have both Netflix as well as Disney. So Netflix and Disney will be moving into communication services, and that's gonna make communication services will be pretty heavily weighted on those four companies. So we have Google, we have Facebook, we have Disney, and we have Netflix. So that's going to be pretty much a large majority of this communication services sector. And with the move out of consumer discretionary, we now have a very large weighting on Amazon in that. So Amazon is now about 32% of that sector. So if you want to invest in Amazon, invest in consumer discretionary ETF, something like that. You'll get very good exposure to Amazon without having to pay the heavy $2,000 price tag of Amazon. And then there were other companies that are moving. Some obviously not as large as the four that I've mentioned. And one other move is eBay will be moving from technology into consumer discretionary, where it probably should have been the whole time. Obviously, eBay is not a technology company. They are in the same area as Amazon with selling goods. So that was something big. It just took place Friday after market close. So we'll see how things play out coming up here in the next week. See if anything major is going to change because of that. Another thing that happened over the week is the Federal Reserve ended up deciding to raise rates by 25 basis points, so 0.25%. Bank interchange rates are going to be going up by that much. It was pretty expected, so there wasn't a huge move in the market. It is a little significant in that rates continue to rise. We might be seeing one more by the end of the year, probably the December rate meeting. But, I mean, I guess we'll see. Overall, it's the first one to happen in September, which could play a big role. October, it is usually a month with higher volatility. I don't think this is going to do much of it. So, overall, not too big of an impact. Like I said, it was expected. So, we'll see where that goes. Again, I think rates are going to continue to rise. We'll see exactly how this plays out as the market continues to come to the end of the bull here. Another thing is mortgage rates are now at a 7.5-year high. So obviously mortgage rates after 2008 really took a big hit. And it was tough. But as the Federal Reserve did quantitative easing, rates did come down significantly, and it stayed at a low point for a long time. We're now seeing those rates start to climb up, and a lot of the home numbers, as far as purchases and sales of new real estate and everything, things are kind of slowing down now. Real estate is a leading indicator of a switch in the market, so we'll have to keep our eye out for if those continue to rise. Home sales have been slowing. We're not seeing much growth in real estate, so it's definitely something to keep your eye on. It could be turning in the other direction now, especially with rates continuing to rise. The final thing that happened is quite big news in the market. So basically, Elon Musk, the CEO of Tesla, was sued by the SEC, the Securities and Exchange Commission, and he was sued for fraud. So it was due to him going on Twitter and posting about taking his company private. So yeah, you're not allowed to do that. That's definitely inside information that you should not be doing. And he was doing it basically just because Elon Musk is a CEO that he has a very big ego. He deserves to have an ego because he is quite a genius. But he is a little hot-headed at times, and sometimes may not make the best decisions. So he was sued for fraud. The decision actually came out yesterday on what was going to happen. And again, the SEC went very soft on their decision, just like they had done with previous decisions of like insider trading. They've been pretty soft recently as far as letting them get by and everything. Elon Musk basically was told, hey, you have to step down as the chairman of the board for 3 years, and you have to pay $20 million in a fine. So, for basically completely frauding all of his investors in saying, hey, I'm going to buy my company on the private market for $420 per share, basically lying about that and then going, yep, we have funding secured, and then saying, nah, just kidding, we're just staying public. So all the investors were lied to, and they said, hey, you have to give up your chairman of the board for 3 years and pay us $20 million. Overall, he still is able to stay as the CEO of Tesla, which if he wasn't, Tesla would probably, get destroyed as a company and never be able to recover. But he's also still on the board. So he lost zero power for fraud, which personally I think the SEC should be taking very seriously. It seems like something that you would want to take seriously. Fraud is, well, something that should be definitely, looked into. But I guess we'll see. We'll see how that opens up. Futures here, at 5 p.m. Central on Sunday. We'll see how Tesla looks. It's probably going to be very volatile. A lot of movement. But that was the big news in finance over the last week. We'll see if there's going to be more news. But we'll wait for that next week. As far as fitness, just one thing I want to talk about is if you're just getting started and working out, my best advice is just stick with what you know. A lot of people will go on Instagram and try to figure out this new workout that they saw on Instagram from this person. It's garbage. Instagram workouts, I personally think, are pretty much all garbage because it's just what looks cool that I can post a video about that will get a lot of attention. But overall, it does nothing as far as help you out with any sort of muscle movement or any cardiovascular health. So Instagram workouts are completely garbage, and also don't just go and read random things that you see people posting as far as like health tips. A lot of people are getting on this keto diet where it's low carb, no carb diets, like stay away from carbs. Carbs are not bad. Carbs are perfectly fine. If you want to lose weight, you don't have to cut carbs. Plain and simple, you don't have to cut carbs. The only way that you're going to lose weight is to have a caloric deficit. So basically, you eat less calories than you burn. It's pretty straightforward. As long as you do that, you will lose weight, and you will lose weight healthily. Continue to eat whatever you like, just make sure you stay in the right portions. That's how you're going to end up losing weight. So stay away from fad diets like that. You're going to see a lot of posting about that, but it's pretty much all bogus. So really stick to what you know. If you're starting out, work out 3 times a week. Start out with, just doing cardio. Maybe going on the bicycles, going on the ellipticals, stair steppers, the rowing machines if you have a place that has those. I personally don't like treadmills if you want to run, because treadmills don't allow for the proper compression with your knees. So, run outside. That's better. Or if you have a track at your gym, run on the track. That's probably going to be better for your knees. But, stick with what you know. If you're doing workouts, you're just starting out, you haven't lifted weights before, stick with body weight workouts. Do push-ups, do pull-ups, sit-ups, body weight squats. Slowly work up into getting those more workouts that you're adding weight and everything. Go to the machines, and then really once you feel like you're getting there, go to the free weights. Free weights obviously are going to test you more than machines because they also have a balance factor in them. So they work out your muscles a little bit more in terms of having to balance that. So really stick to what you know, and then move on to other things as you continue to grow. Stick with 3 days to start out so that you can actually stick to it and make a commitment. And then, if you do feel like you want to keep going more, add a 4th day and then add a 5th day. Make sure, you're breaking up your rest days. I personally do 6 days a week, and I have 1 rest day, which works out for me. I switch up my workouts to get the proper rest in between. And as far as health, again, stick to what you know, what you're eating. Don't be going on these fad diets. Eat what you like. You should be able to tell what's healthy, what's not. And overall, if you want to lose weight, you need a caloric deficit. Less calories in than you're burning. And if you want to gain weight, you're trying to put on mass, you're going to need more calories. It's pretty simple. So hopefully, a little background on the finance today and from the past week, as well as a few fitness tips, was able to help you guys. I'll try to keep doing this weekly from here on out, and just give an update and give a little fitness tip. I'd be happy to answer any questions. So thank you all for watching, and have a great rest of your week.